What's up, traders? Norat back again to share with you the techniques that I use to find trading opportunities for long term investments. In these videos, I'm building on the techniques that I use to find setups for risk defined entries on trades or long term investments. We're going to look at a very simple technique called retracements. Now, a lot of people like to use Fibonacci retracements. They use all the numbers out there, but I keep it very simple. I only use one. We're going to look at some historical examples to learn from. And then at the end, I'm going to show you an opportunity of something setting up right now. So let's jump into it. What I'm talking about is retracements. Now, these are also known as Fibonacci retracements. And in TradingView, you can go and you can set up a Fibonacci retracement tool. And then if we wanted to analyze the price of Apple, where its retracement would be, we'd start it at the COVID low. What I want to do is I want to find a major trend. And for that, there can be some debate, but we're going to use our eyes. It's pretty obvious that from the COVID low up to the recent all-time high, that's the long-term trend on the weekly chart as we're looking at. And so the retracement level for Apple right now, the 50% retracement, is 118. Now, I know a lot of people like to use the Fibonacci retracements like 38.2, 61.8, 23.6, 78.6, and maybe it works for them. But I guess I'm not that smart. I like to keep it simple. And what I do is I take that tool and I remove all the extras. And I just look for that one level. It works well enough for me. I don't need to look at the other ones, but I'm not knocking anyone that does. Another thing I like about this is that there's some what I call price inflection at that level. The trend came up, and then you notice how it held back in March of 2021 to come up to make that extra leg. I like that extra support to add emphasis to the level if it reaches it in the future. Now, the whole premise of this is because I like pullbacks. I like getting things cheap at a discount. And this gives me a line in the sand, a objective level for where I want to buy something. Now, you can set alerts for this. I know Carrie likes to set price alerts in Seeking Alpha. In TradingView, you can go anywhere on the chart and we can set an alert from inside the chart, add alert, and you can set that for Apple there. You can do all kinds of things. It can be app notification. You can show a pop-up, email, do all sorts of things. I even have it hooked into my Discord. And that's how you can use it to alert you when price gets to that point. Let's look at Apple in the past at an opportunity before and see what it did. Let's go back to before COVID, if anyone can remember the markets back then, the BC before COVID. Apple made a low back in December of 2018. Now, if you don't recall, that was the anti-Santa Claus rally. Markets were fearing more interest rate stuff. There's no reason that Apple should be affected, and so it was a great discount. Well, let's say you missed that. And now you've missed this whole run up and you just can't bring yourself to buy it on the run up. I don't blame you. I wouldn't want to buy it either because you never know when it's going to pull back. Apple made an all-time high in January of 2020 prior to COVID. And so if we identified this trend, which is pretty clear to see from the low to the high, the retracement, the 50% retracement was post-split 58.73. We're not going to do the math, but it should look the same no matter what kind of chart you're looking at. Again, I have some extra oomph, some extra backing to this with a past all-time high that it made in October of 2018. These levels line up. I like this support. And now if we use the bar replay to go forward, remember all that fear and uncertainty and doubt, the FUD of COVID, it just brought us back to that level. It brought Apple back to a discount. And that alert that I had set, that price I wanted to buy Apple, worked out great. This happens all the time. Let's look at some more examples. A recent example in a stock I'm sure everyone loves to talk about and trade and invest in is Tesla. So let's go back to Tesla. This is the daily chart of Tesla. Now, if we're trying to establish where's the trend, well, you have price come down to here, a lot of just gobbledygook, and really right here is the beginning, I would say, of this leg up. Okay, so that's what we're going to use to start our trend, and then we're going to look for that trend, measure it up to the all-time high. There is our 50% level. 895, let's call it 900 if we want to round it off. Now, what I like about this is it also matches up with the past all-time high that Tesla made the 25th of January, 2021. And if we go forward with the benefit of hindsight, Tesla pinged that level on December 20th, 2021, where it proceeded to go up to 1200. Great tradable opportunity here. I hope some people took some profits up at this point, but it was a good chance to get into it. Now, prices come around and it's hanging out at that level once again. It's getting a little dangerous, getting a little bit of uncertainty, but if you're a trader and you're looking for short-term opportunities, this level back here was a great opportunity to take it for a quick retest of the high. Didn't break it, gets a little dangerous. But that is how key that level can be when you have a 50% retracement backed up by some past price action. There's a lot of stocks out there that are doing this right now because you have the COVID low defining a lot of these long-term trends, followed by an all-time high that they've done in the last maybe 2 quarters. Let's look at an example of when this doesn't work. And for that, I'm going to use Zillow. Now, I like Zillow. I use them for my rental properties. And so I like the company. They, like many stocks, had a low in March of 2020, the COVID low, and it made an all-time high in February of 2021. And so the level that I'd be looking at would be about 110, 111. That's the 50% retracement. And I like that we have some highs, a past all-time high right here that it tended to respect. And so that makes it a very good level. That's a buying opportunity. I like it. And when price of Zillow got down to that level, I was a buyer. I bought Zillow. But I'm not just going to buy it and hold it forever. I'm going to go in with a plan. The plan is what I want to see is a rise up to retest that high. Not quite the exact high, because oftentimes it can not quite get there, but you got a lot of potential movement up to, let's say, 180. All right. So if we use the tool here in TradingView for a long position, let's say we buy it in here and we want to take it up to 180. That's a pretty good move. We're looking for about a 59% move in the stock. Sounds good. But I don't want to just leave myself out in the wind here. I want to figure out what my risk should be. And for that, I like to use as my guideline a 3-to-1 risk reward ratio. In other words, if the price of Zillow goes down 20%, I don't want to own it anymore. This is trading. But having a plan around a setup that you enter lets you avoid what I call the uncanny valley of risk, where you become an owner in this company and you just kind of hope they do well. That makes sense because if we're looking for a 60% move, if we take enough of these trading opportunities, even if we take some losses, we'll come out ahead. And that's the game. So as time goes along, price definitely likes to hang out and hold at this level. It's established a little range of respect. And so as price goes along, we'll slow this down just a little bit. It gives us a little sign that it might be going up. But that fails. Now we've entered a problem where this past range at the level it is no longer respecting. Actually got out on this point right here because it broke these lows. Now, of course, price came back up. And sometimes when you get out of a position and it goes in your favor, you can feel rather foolish. But I'd rather have a plan than not have a plan, because as time has gone along, you then would have eventually gotten to your actual proper stop level here. Your risk has been triggered. And even if you get out here with a 20% loss on the stock, you're better off than people that are sitting there wondering what to do as it just grinds down on them. Because you don't want to be in a situation like this. Prior to their last earnings, nice little run up to make people think that it was going to go well, and then a sudden announcement that they had to write off $300 billion in inventory of real estate because that business model failed. So now instead of being down 10% in the stock, which wasn't good, 20% in the stock, which wasn't good, you've avoided being down 41%. Now you don't know what to do. And it just grinds and grinds and grinds. So by taking the small loss, the 20% loss, you avoid a 46, 50% loss on this stock. All because I had a level that I wanted to enter, that 50%, it failed, and I'm out. It gives me a guideline for finding good opportunities, but not becoming married to the positions. And that lets me keep my risk small and redeploy the capital into something else that might be a faster and better winner. That is my general philosophy for using these setups and entries on stocks for the long term and the short term. And now an investor doesn't know what to do. It could reverse at any point. But what you don't want to do is you don't want to find yourself in this situation where you have no plan. And using this as a guideline and being strict with your risk controls can keep you out of a situation like this. The last few months have been a great example of this kind of setup. As promised, I'm going to leave you with a current opportunity. Comcast is a stock that I own. I've owned for a while, and I use their service. If we, again, look like most stocks at the trend from the COVID low to the all-time high, we get a level of about 46.75. And if you've been watching the video, you know that I like to see the past all-time highs match up. And so right now, as I'm making this video, price in this down move from August of 2021 has pulled back to its 50% level. A little bit of support here, a little bit of spike there, and it's still, in my estimation, holding. You know what I'm going to do? I'm going to add to my Comcast position, but I'm not going to give it forever. I do not want to see it break this range. And that's going to be my plan for this. So I hope this helps everyone add a new tool to their toolbox for both trading and investing. If you have questions, I have a channel on the Discord, Norox Trading, on Carrie's Discord. You can ask me about this video or past videos. I'd love to talk to you. And make sure that you like, share, subscribe, and do all the things that the algorithms like. We'll see you in the next video. Trade wisely.